Hi there, it's Michael Bernstein, your working out accountant for Bernstein Financial. It's in the early evening. I'm out for a run. I'm ready to do some stairs. I actually did some already, and I'm at the top of the convention center in San Diego near the bay, and you'll see behind me nice bay scene. Give you a better look. It's a beautiful evening. Here's Coronado Peninsula and the Coronado Bridge, the Bayfront Hilton. Okay, beautiful set to do running and to get a tax tip, financial tip. The tip, this video is on gift taxes. It's related to the trust series because we talk about estate taxes on one other video. And gift taxes are related to estate taxes because they're a little bit like estate taxes while you're alive. So you've probably all heard about gifts, giving gifts to children. How much is, I can give 10,000, I can give 15,000. Can they deduct it? Is it income to them? What happens? So first of all, you don't deduct gifts, and whoever receives them are not taxable. It's a transfer of money or assets. Also, oh, by the way, the workout, I've already come up 100 stairs, but if I do this tax tip while I'm running up 100 stairs, I can't do it. So I'm up at the top now, and I'm just gonna go down 10 or 15 and back up, back and forth while I can talk, and we'll finish up the other stairs later on. Okay, so if you give a gift to, for instance, a child, if you give less than 15,000 in 1 year, you don't have to fill out any paperwork. If you give more than 15,000 in 1 year, you're supposed to fill out a Form 709 gift tax return. And there's no tax to pay if you're under the exclusion. And for most states, it's up to the estate exclusion, 11.5 million, sometimes a little bit less. But the point is, you give a couple 100,000, no tax. No tax to anybody, no tax to the recipient, no tax to the giver, giftor. Just have to fill out the form. Why do we have to fill out the form if there's no tax? Well, when you die, there's that $11.5 million estate exclusion. And the amount over the 15 added up over years reduces that lifetime estate exclusion. So we keep track of it in case we have over 11.5 when we die. We have to reduce that exclusion at death with the amount of the gifts over 15,000 each. You say, well, my estate's not worth near that much. Why do I have to do that form? Well, you never know. You might inherit money, might win the lotto. Who knows what might happen? Life insurance, or Congress may lower the exclusion. So you still got to fill out the form. Now it's 15 per person. So I can give 17 different people, 15,000 each, still not fill out the forms. But if I give one more than 15,000, got to fill out the form. Now, if I'm married, my spouse and I can give 15 each to a child. If that child is married, we can give 15 each to each of the child and their spouse. Add it up, that's 60,000 in 1 year you can gift without filling out any forms. You can do that each and every year. So you can see there's lots of ways to, and if you want to get 100,000 to two children, a child and their spouse, in a short period of time, if you do it in December and January, you've got 2 separate years, you can get 120 to them for maybe a down payment on a house or something like that. Additional gift tax items that you have to worry about is when you give assets. So let's say you give a house while you're alive to a child. Well, the gift is the equity position. So if the house is worth 200,000 and there's a loan on it for 50, you made a gift for $150,000. Is there a gift tax on that? No, not unless you're over your exclusion, which is very high. Do we have to fill out a form? Yes, we have to fill out a form, turn it in, 2 or 3 pages long, not difficult to do. So you take care of that. Let's say I want to give a $100,000 gift to my 2 children, my wife, my spouse and I want to give it to them. And it's early in the year, it's March. I want to give them $100,000. Well, it's over the 60 I talked about. Well, how about you give them 100 and the gift is 60 and you loan them 40. You say, you got to sign this note, you owe me $40,000, that's $40,000. Well, under $100,000 loan to children, you don't have to charge interest, so that's okay. Guess what you're going to do on January 1st of next year? You're going to forgive that loan, and then it's a gift to the next year. That is allowed. You should do the paperwork, That's how it's done to avoid. What have you avoided? You haven't avoided any tax. Well, maybe if your estate goes over 11.5 million later on, because you haven't used it in your exclusion. But if you avoided filing the 709 forms, which can be a little bit of a hassle for people because they don't want to file another form with their accountant. Okay, that is the tax tip of the day. Go out and work out. Bye.